For employees at startup firms, many have been dealing, for the first time, with stock valuations that aren't continuously moving up and to the right. With the pathway to an IPO greatly reduced these days, many employees are having to reconsider important personal financial decisions as a result of this. At Forge, we're seeing innovative, talent-focused companies implement policies that ease some of this pressure on their employees. And so, to dive deeper into this topic, today I'm joined by Charlie Grimes. Charlie is Managing Director and Head of Capital Markets here at Forge. Hey, Charlie.
Hey, Dan. Thanks for having me back.
Charlie, your team works closely with private companies to structure equity compensation programs that allow employees to sell stock at different points throughout their tenure. I think if we were having this conversation 5 years ago, you'd have told me that it was a tough sell convincing a private company to let their employees sell stock. Now it's much more common. So tell us, what's changed?
So for a long time, the idea of employees selling their vested shares was not the norm. But many disruptive ideas start out that way, like taking a ride from a stranger or staying in some random person's house. But over time, it becomes mainstream. Now, nobody thinks twice about taking an Uber or staying in an Airbnb. Likewise, private companies aren't batting an eye when an employee wants to sell stock. And Forge has built the technology and has the expertise to support companies who are thinking differently about equity. It's actually a big reason why Forge went public in March. We wanted to convey that expertise to companies, employees, and investors who are seeking new private market solutions and want to work with an industry leader.
Charlie, obviously we've seen a market shift in the last 6 months. Is that affecting how private companies look at employee liquidity?
The biggest shift in the current market is that there's less liquidity. There are fewer IPOs and SPACs, and primary fundraising has become a bit more conservative. All of that has narrowed the path for employees to find liquidity. And that creates a sense of uncertainty and even perhaps anxiety among private company employees.
So we've seen private market valuations decrease, and we've even seen some layoffs. According to a Forbes survey just last month, 87% of tech workers globally are actively considering switching jobs in 2022.
Listen, the world changed with the pandemic. Employees want flexibility when they work, where they work, and a clear line of sight to achieving their goals. Employees also want some ability to see liquidity for the equity they've earned while helping a company grow and become successful. From a company's perspective, the competition for talent is real. Private companies are competing with Google, Apple, Tesla to hire great people. And even though those public companies have seen declines in their stock prices, that stock is still liquid. So when considering working for a private company, a job candidate might be thinking, this startup could have a lot of upside, but it is risky. Could you help me find a middle ground so I can work for you instead of Google? And that's where Forge can help.
So to that end, what's an example of an equity strategy that a private company can implement today that could drive greater employee retention?
Well, increasingly, private companies are allowing employees to sell a percentage of their vested stock. For example, a company may say, once you hit your 2-year anniversary, you can sell 25% of your stock. It rewards employees for their hard work, lets them use that money to do things like buy a house or start a family, but it keeps them invested in the company for the long term.
And so how is that different from a traditional tender offer or stock buyback program?
So here's why this is innovative. It's an ongoing and rolling process throughout the year in which all eligible employees can participate. Unlike a tender offer program, which is usually a one-time event every few years, in this case, an employee may want to sell in January or June or November. Employees will be eligible at different times since they have different start dates and different vesting schedules. And that's where Forge can be such a valuable partner to these private companies. Since we have such a large network of institutional investors, we can work with employees at any time throughout the year whenever they're looking to sell.
Thanks a lot, Charlie. We'll continue talking about this and the broad range of other topics that affect the private market in the weeks and months to come. To read more about these trends, check out this month's private market update at forgeglobal.com.